On today's hot sheet, I'm discussing GDP shrinkage, interesting term there, in the first quarter, the job openings and labor turnover survey, as well as the ADP employment report, and we've got mortgage applications over the last 7. Big economic data day. Today is Wednesday, April 30, 2025. I am Byron Lazine, and the hot sheet starts now. Okay, live from Naples, Florida today. Let me know in the live chat which market you are tuning in from, wherever you may be. Now, here's the thing. On yesterday's, we did on Tuesday. We're going to probably start doing this, by the way. I'm going to announce this inside of BAMX today. But for the month of May and the month of June, we're going to do live role play every Tuesday at 9 before the hot sheet. Inside of BAMX, so it's a members only thing. You jump into BAMX if you want access to that with me and Tom Toole and Lisa Schneider. We're going to do that every Tuesday, I think, at 9 a.m. I'm going to make the announcement today inside of BAMX. So I know we're going to do that. So little breaking news here first for the hot sheet, folks. I'm going to post it in BAMX here later on today. So yesterday we're on this live role play. And we're kind of going through some of the scripting conversations that we're having, we're having with consumers about these economic concerns, the uncertainty. I brought up the example yesterday inside the group, like, man, I had a furniture store, employee telling me, uncertain about tariffs, rattling off a lot of uncertainty. But wasn't able to rattle off. And I said, well, where's this piece from? Where's this piece built? Where's that piece built? Didn't have the depth of knowledge, but the uncertainty is a real thing. It's a real factor. Just like, somebody I bumped into at the golf club bragging about a bicycle he bought and prices are already going up due to tariffs, he says, yet can't tell me where the bicycle's even made. So it's like, well, is it going up because maybe they're short on supply, or is it tariff, right? So the layer of uncertainty just creates people to say, this is happening, that's happening. A lot of it's uninformed. A lot of it's unknown. Nobody knows. There's negotiations happening, obviously, right now. But we were talking about this yesterday, like having these conversations. By the way, I just had an agent up in Connecticut on the team say, we just got a deal in place last night. We were second place. It was a multiple offer situation. They were second place. The buyer backed out due to political uncertainty. So then our buyer says, should I be concerned about the political uncertainty? I don't know. You're buying in a little town in Connecticut that has 5 homes for sale on the market. You think Washington, D.C. cares about this little town? Are you really that concerned? We were able to talk to that client because it's a friend, right? In that fact, that's not the way you would talk. But it's like what we were talking about yesterday on the role play. Like, hey, I mean, have your plans changed? Are you like you were going to be here for the next 12 years? That's the average homeowner tenure. I mean, the last 12 years, we've had 3 different administrations in the White House. A lot's going to change over the next 12 years. If this buyer's that's ahead of you's got uncertainty, do you think other buyers have uncertainty? Do you want to buy when everybody's confident, when multiple offers go up, or do you want to buy when you've got some people on the sidelines? That's how you got this opportunity to begin with. Their uncertainty. If everybody was confident, you might have came in 8th place, not second. And now you're in the catbird seat. So all this uncertainty, we're going to be, we're dealing with it here on the hot sheet, how to deal with it. There's more of it today. Okay. The point is uncertainty. There's more of it. Welcome to the news here this morning. GDP shrinks 0.3%. So the U.S. economy, way to look at that. I can't look at anything if I don't have my screen connected. I'll pop that up here in a second. The U.S. economy contracted at 0.3% rate in the first quarter. Now, it wasn't expected to have the growth that we saw in 2024 previous quarters. Okay. Remember, quarter 4, 2024 was 2.4%. So the expectations here in quarter one wasn't anywhere close to the growth we've seen, over the last year and a half, 2 years on, economic growth, on GDP growth. But it was expected to be positive. It was supposed to be 0.4%. Instead, the news comes out today that the U.S. economy actually contracted at a 0.3% rate in the first quarter. Okay. So interesting. Imports surged in quarter one as businesses rushed to stock up ahead of tariffs. Now, tariffs been more of a Q2 story. So Wall Street Journal reporting that tariff preparation was an impact on this economic pullback. So what does that say for quarter two? Because now the tariffs have become even more of a reality in people's minds, and the confidence and the uncertainty, and are deals being actually done? Are they negotiated? All these different things people are wondering. The people being Wall Street as well. Wall Street's, hanging at the edge of their seat. Like, are these deals being done? The administration yesterday alluded to some deals being done, maybe one, maybe two. A lot of countries out there now to see maybe one or two deals being done. Is there going to be momentum? Does that mean more deals are coming? So if the first quarter was impacted by preparation of tariffs, what does that say for quarter two? Because remember, technically, 2 quarters of GDP contraction. Technically, now they changed this rule in. They changed this rule a few years ago. I don't know how many years ago, 3-4 years ago. They said no, there's more to it than. But historically, rule of thumb, 2 quarters of GDP contraction means you're in a recession. That triggers a recession. So we've got 1 quarter. See what happens in quarter two. We'll see if they try to, change the rules up on us again. But historically, 2 quarters negative GDP growth, recession. So there you go. You've got 1 quarter now. Excuse me. Now remember, 1 quarter this is an advanced estimate. Okay, so we saw this a whole bunch last year, 2024. Like, some of the estimates would come out. Remember jobs? We were talking about it all year 2024. Would be like, man, look at all the hiring. And then they do their revision 2 or 3 months later when nobody's paying attention, and the job growth was way less than what the initial estimate. You have revisions just like that in GDP. Okay, so this is the official U.S. government website that puts this out right here. So this is the advance estimate. Okay, this is what will be in the news today. The Bureau of Economic Analysis puts this out. So this can be revised. That means it could go further down, it could go flat, it could go up, whatever. But this is an advanced estimate, could be revised, will be potentially revised. It'll definitely be looked at in the future as more data certainly comes in. Now, last year I said this, if I said it 10 times, I said it 100. Kept talking about, and Jerome Powell kept talking about this strong economy, that we had in 2024. Jerome Powell, FOMC, they meet next week, by the way. So we're going to get a decision next week from the FOMC. CME Group. Let's see what CME Group actually says right now about, with this GDP news, if they think that because remember, they've got 2 jobs here: bring inflation down, maximize employment. Well, if GDP is going down, that's a signal that employment could be next. Well, CME Group says 94% chance that the FOMC, the Fed is not going to do anything next week. So not do anything with the rate. They're not going to move it up, not going to move it down. That's what the CME Group says right now. But last year, remember, all this talk that Jerome Powell was putting out there, certainly DC was putting this out there last year, like, we have a strong economy, even though your friends and your consumers are like, strong economy, 7% interest rates, like the prices at the grocery store, the inflation, all these different things. The economy wasn't working for everybody, but GDP was growing, 2+% every single quarter. So GDP is growing and unemployment's low. We must have a great economy. That's one of those things that Jerome Powell talks about. Hey, the economic conditions are strong, jobs are strong, all of that. And what did I say all year last year? If I said it 10 times, I said it 100 times. I said, if you pull government hiring out of these job numbers, our GDP would plummet to 0% growth. Look at GDP. Look at government and government-related sectors, the percent of total employment hiring. This is the 2023, 2024 spike in government hiring was off the charts in the last 12 years. Now, there was a recovery that had to happen from COVID because, it had to happen if you wanted to keep pace with historic government hiring. That's obviously a whole nother argument. Like, does the government just hire too much? That's a whole nother argument. We're not going to get into that right now. But, if you wanted to kind of catch up to what 2016, 17, those levels of government hiring were after, COVID, you were going to have some kind of pop up. But look at this. This is off the charts type of a pop on government and government related sectors hiring. So when we kept talking last year, I said it all year last year about 2024, like, oh my gosh, look at how many jobs. And we would go through it here on the hot sheet. It's like, this is all government. A lot of it's government jobs. I mean, this isn't private sector, coming up with, growth in their companies. These are government jobs. It's your tax money paying for folks to have a job. Okay. So, I know, listen, there's debate how many of these jobs you need, but what's happening in quarter one? The new administration has made a decision that you don't need as many of these jobs. And so I said it all last year. If you take government hiring out of the picture, GDP is not going to show any growth. GDP is not going to, it's going to look like, you take the stimulus out of this economy is shrinking or it's moving sideways. And we get the first picture of that today. That was it was pretty obvious last year. When you look at it, it's like, man, this economy is still being stimulated. Even though we're not printing money, we're printing jobs, same kind of thing. Okay. Same kind of thing to me in terms of stimulating the economy. We're not seeing it now. Now there's a couple things. There's a couple things here I want to just take a look at on this. Nick Timiraos. You hear me talk about Nick Timiraos. He's a Wall Street Journal reporter. If you follow football, you'll get this analogy. He's the Adam Schefter of the Fed. Okay, so he gets information before most people get it on kind of what's going on. He put out a obviously everybody on X is putting out their they want to be able to share the news. GDP fell 0.3% in the first quarter. So he puts it out. There's the chart. We've seen a lot of GDP growth per quarter over the last couple of years. You got to go back to quarter one, 2022. What was going on then? Inflation was obvious. The rates were going to start moving up. It was obvious. That's the last time we had a GDP, decline. Quarter one, 2022. The levels of uncertainty, I would say, were as high, if not, you could argue, higher than they are now. Okay, a lot of the stuff right now going on is a little bit of political warfare. Wait and see. But that's the last time we had GDP shrinkage. So look at all these other quarters: GDP growth, GDP growth, GDP growth. Now we have it moving down 0.3%, and that is 0.7% off. So 0.75 of a point off of expectations. Okay, but okay. What Nick Timiraos says is a better measure of underlying domestic demand. So is he trying to get a message out from the Fed that says we're not worried about this GDP decline? Because remember, Nick Timiraos is the Adam Schefter. When a football owner or a GM of an NFL team wants to get a message out, they sometimes will leak it to Adam Schefter. Hey, get our spin out on this. So is this first tweet on the news from Nick T a message that the Fed wants to be out there? Meaning, hey, we're not going to overreact because this GDP decline is going to bring more pressure on the Fed. Like, are you going to be dropping rates next week? Like, it's going to be all in that Q&A that we cover, that presser that Jerome Powell does. Are you going to be dropping rates? Are you going to be dropping rates? Like, you got to act soon. You can't wait too late, which I agree with. They need to be on time, right? The administration wants the Fed to be on time. They're going to be asked about the timing a lot. Well, 2 quarters of GDP decline means you're in a recession. I mean, by the time they meet next time, quarter 2 is basically over on their next meeting. So should you be making a cut this meeting? CME Group says they're not going to, but they're going to be asked that question. So is this message from Nick T a message coming from the Fed that, hey, we're not that worried about this GDP number? Okay, because he says a better measure of underlying domestic demand, real final sales to private domestic purchasers, GDP less inventory change, net exports, and government spending grew at 3% annualized rate. Okay, so these are real final sales to private domestic purchasers, and it's been steady the last 2 years. Okay, so here's what I'll say. The private sector is still performing. Going back to what I shared earlier, you pulled government hiring out of the first quarter, but the private sector hasn't been impacted. I said it all year last year. You pull government spending out of this economy, and the economy's not growing. The private sector isn't growing enough to show positive GDP. Now, the private sector is not doing any worse or better than they've been the last 2 years. That's what we saw in quarter 1. 3% on real final sales to private domestic purchasers. It's been steady. Didn't decline, in fact. So 3% on that number, despite GDP decline, but GDP decline driven by a lot of government stimulus. Interesting. Government stimulus, which has been stopped now. Stimulus meaning hiring. That's one way to look at it. And is that the message that Jerome Powell is going to send us next week? Here's one thing I know for sure. This is creating opportunity. I don't think with midterms coming up 7 quarters from today that the administration wants to see 7 quarters of GDP decline. Tariff deals, they're claiming they're getting close. All these kind of things can start to change. And as they change, do consumers get more confidence? Likely is the answer is yes. So fast forward a year from today, if consumers have more confidence, what does that mean for buyers competing with each other? Do you want to compete with more confident buyers, or do you want the story like my friend where, wow, the buyer backed out due to political concerns in a small little town many, many miles away from Washington, D.C. that D.C.'s never heard of? I can promise you nobody on Pennsylvania Ave has ever heard of this little town in Connecticut. Nobody. Nobody's been there. Nobody's heard of it. It's an afterthought. And so I think for a buyer perspective, an investor perspective, this uncertainty plays into the hand of negotiation. How long does it last? Nobody knows. How long did it last? What did Lisa say to BAMX members during the live role play yesterday, the members only role play that we did? The buyers that took advantage of March to May 2020, while everybody else was sitting on their uncertainty couch, trying to figure out, do I wear a cloth mask? Do I do a disposable one? Should I leave the house? Should I wash the groceries down? I was a grocery washer the first 2 weeks. I didn't know what the hell was going on. A lot of people didn't know what was going on for 2-3 months, but there were some buyers that said, ooh, opportunity. I'm going to buy stocks. I'm going to buy real estate. The uncertainty window for those folks didn't last long, but the ones that jumped on it, they're super thankful. All right, job openings. Are we seeing any movement? That we had big GDP news today. What are we seeing with job openings? Number of job openings here with today's report, little change. So a huge economic dump. We get the GDP, Now we're looking at job openings because we know the Fed's going to be looking at this stuff as they meet next week. Bureau of Labor Statistics says not a significant change here. 7.2 million on the job openings in March. Over the month, hires held at 5 million. Total separations changed a little, 5.1. So job openings well down from peak levels. Remember we were up over 11, getting close to 12 million. You got 7 million holding steady. Basically there's jobs available. There's remains to be low unemployment, all of that kind of stuff. So on the job and labor turnover survey, we're not seeing, we're not seeing big movement there at all. So the Fed's going to be able to, that's one indication that the Fed next week is going to be able to point towards a strong job market. But let's look at the ADP employment report. This was released today. Private employers added 62,000 jobs in April. Does this tell a different story? Well, the chief economist from ADP, Neela Richardson, says unease is the word of the day. Employers trying to reconcile policy and consumer uncertainty with a run of mostly positive economic data. Till today, obviously, with the mostly positive economic data. It can be difficult to make hiring decisions in such an environment. It can be difficult to make a lot of decisions. I mean, that's what we were talking about with the, with that role play yesterday inside of BAMX. It's like, hey, people don't make decisions quickly when there's this level of uncertainty, when consumer confidence is down, and you're going to see it, even with private employers. I mean, yeah, you take a zoomed out look, it's growing, but are we flattening out right now? Okay. Is this moving sideways? Because they're just not going to make decisions right now. All right. So here's the change in U.S. private employment by sector. You've got trade, transportation, utilities high up there on the list. You have education and health services high on the list. Business, professional, leisure, hospitality, manufacturing. Those are the top ones here, according to ADP. But the uncertainty thing isn't just the consumer. It's not just the furniture salesperson. It's leaking into every sector of the economy, the decision makers. Certainly the politicians are going to ride this news, mainstream media. And that's why bringing this macro discuss, how long are you going to be at the house? What are you really concerned about? If you're going to be there 12 years, the last 12 years, we saw 3 different presidential administrations. Get to the core of what is stopping somebody from making their real estate decision. And if that benefits them, if waiting benefits them, sometimes it does, sometimes it doesn't. But like waiting for more people to be confident, does that benefit you in making offers right now? It's a really important question. So this private sector employment increased 62,000. The March 2025 number was revised down from 155,000 to 147. So well off of March's numbers. Okay, this ADP private employment, you're seeing the private employment slow down. Not many, decisions are being made right now until they kind of see what's what. Pay gains by firm size, small firms up 2.8%, medium firms up 4.8 to 4.9%, large firms up 4.9%, but a lot of unease happening. So you didn't see job openings move, but you see employment now moving, and they're talking about uncertainty, talking about unease. What's the Fed's take going to be on that next week? Certainly something to consider. All right. Mortgage applications. How's all this unease, uncertainty, this economic data that we're taking in? How is this impacting, home purchasers in the way that they're thinking about it here? And the headline number, the one that's going to get reported in mainstream media, mortgage applications decreased 4.2% from the week earlier. This is, of course, according to Mortgage Banker Association. So now 3 weeks where we're seeing this data move down. This is all due, the big tariff day and whatever in the beginning of the month has created all this uncertainty. And we're seeing now the rates pop up after shortly moving down on uncertainty. And they've moved down a little bit this week, but overall up from some of those lows. What we really care about is what's happening with the purchases, because you can pull refinances out and it can tell a different story. So the refinance index did decrease 4% with top line number, and the purchase index was the same. So week over week, you saw a 4% decline from 1 week earlier. But if we just compare to the same time a year ago, we're 3 points higher. Okay, so we're still performing, still gives me, gives me good hope that as these rates move down, we could have a second wave of activity at some point this year. We're moving through this spring market now. And so the indications are that we've got more interest, more demand coming off the sidelines, a little bit more than we did last year. And maybe we can start moving that existing home sale number up, which still seems to be in the basement. Mortgage rates a little unchanged with the MBA Vice President, Deputy Chief Economist Joel Kahn in his comments. You're seeing signs of labor market weakness. We just saw that with the ADP. So job openings, okay, no story there. But, if we look at the last month, you saw signs of people. I'm not going to make a decision. I'm not going to make that higher right now. So growth stopping. We're seeing that in GDP, lowest pace since February. So you got a broader economic uncertainty happening. Same story. And you got slow housing inventory increase. You have it higher in other markets than you do. But this uncertainty, how long is it going to last? It lasted 3 months in 2020. Okay, it was 3 months, and everybody who made decisions, financial, economic decisions, was so grateful that they did, while everybody else was in a wait and see time frame. Is that going to be the story that plays out this time? Right? These are the conversations to have with your clients, your customers. What's happening? I love what Dave Ramsey says, like, whatever happens in Washington, D.C.'s house doesn't impact my house. He says something like that. Like, hey, tell me what's holding you back. What decisions have changed your goals? What decisions happening economically, politically have now changed your goals? How does that impact your buying decision? Get to the core of what they're worried about, and have your plans changed on how long you're going to stay in the house. Have your plans changed on location because of that? Is your job impacted by what's going on? With whether it be tariffs or whatever. Get to the core of what's holding them back, because that's going to give them the clarity and ultimately the confidence to make a decision one way or another. When they're just uncertain, they get stuck, they sit on the sidelines. Okay. I don't know, an athlete, my knee's hurting. I don't know. I'll just sit on the sidelines, wait for it to feel better. If I get an MRI and I'm clear, I feel more confident I could jump back on the court. Dow is down 700 points, by the way, on this GDP contraction. So the recession fears are up. Why? Because two GDP quarters, you have a first quarter GDP contraction, 2 GDP quarters are going to start raising that. We're going to hear the R word over and over again. So 700 points down here to start today off of this news. It's going to put pressure squarely on the administration in DC to get deals. They want good tariff news now. Get deals done. You've got a GDP that's contracting. We're going into a recession. That's going to be the story here. You've got a 10-year down to 4.173. So the 10-year maybe off of this news is going to move a little bit in the right direction. This is a low point for the last 5 days, not a low point for the last 1 month, but off of our high points. And so 4.172 could see a 30-year fix move down again. We've had some slight moves down during the week. We had, the week started out at 6.82, 6.81 yesterday. We'll see where it goes today. Do we get to 6 3/4 or even under that with where the 10-year has moved? If you want to get in on some of these discussions that we're having, I mentioned earlier with the BAMX members, just jump into school.com/BAMX. And we're every Tuesday, 9 a.m., May and June, we're going to be doing those role plays on different situations, whether it's these economic situations or just standard listing buyer presentation stuff. Also, we got a public webinar completely free today going on. That's going to be, no, Haley, when is that? Is that 12:30 or 12? That's going to be Sharon Srivatsa and Andrew Undum.
12:30.
12:30. Okay. So, $1 million presentation secrets. Listen, Sharon and Andrew are two of the best presenters, listing presenters I've seen in our industry. I know we've got thousands already signed up for this. So jump into it. 12:30 Eastern time, 9:30 a.m. Pacific time. It's today. So jump into it. The link Haley will put in, you just, you kind of fill out this information here and register. It's going to be a Zoom call today at 12:30. If you want those $1 million presentation secrets with Sharon, with Andrew, I jump into that. It's going to be incredible. And then for BAMX members today at 3:00, I'm going through some systems on how to manage business stuff. Okay. So that's going to be how to operate. What operational systems do you need to make decisions quickly? The last thing, hey, if all the consumers are not confident and they're stuck in the mud, the last thing you need is to be indecisive on how to run your operations. BAMX members, I'm doing that today at 3:00. Links in the BAMX calendar. So I'll see you guys there for that as well. Hope everybody has a great day, and we'll see you back here tomorrow on the hot sheet. Until then, toodaloo.